Hey everyone, welcome back to Corporate Decoder, the place where we make financial filings a little less boring, because let's be honest, reading a 10K isn't exactly a thrill ride, unless maybe you enjoy watching paint dry. Today we are diving into VEEA Inc's annual report, and let's just say their financial picture is more like a suspense novel than a simple fairy tale. Buckle up. Here's the scoop. VEEA, a tech company trying to revolutionize how we connect to the internet and use AI at the edge of networks, is facing some serious financial headwinds. Let's dive into the numbers. First, revenue took a nosedive, going from about $9 million to just $141,760. That's a 98% decrease, or losing virtually all their sales. This is mainly because in the previous year there was some special income from the license of some advertising application they had. The cost of delivering the product also went down, which isn't surprising, with revenue plummeting the same way. Interestingly, while sales are falling off a cliff, product development expenses nearly doubled. That means they're spending more to develop their products. This could mean they're trying to innovate their way out of their problems. General and administrative expenses also saw a big jump, increasing by over $9 million. This was driven by things like stock-based compensation to employees and also professional fees. Here's a big one. Transaction costs exploded to over $55 million when they were zero the prior year. What are those? Well, this is due to a complex liability because some shareholders may get more shares if the stock does well. Since it wasn't clear how many shares they would have to award, they marked it up as a liability, which exploded the operating expenses. That's definitely not good. All of this results in a net loss more than tripling to $47.5 million. That's quite a jump in losses. To cap it all, they are burning more cash, their cash reserves going from $6 million to $1.7 million. Looking at these results, you can start painting a picture of a difficult year for the company, which also explains the accumulated deficit. The deficit has increased to about $217 million from $170 million. So how are they planning to stay afloat? Well, the company talks about needing to raise more money. This involves several things, including selling stock, getting a strategic investment, and cutting costs. One factor to keep in mind is also the global economy, and any trade difficulties. They depend on international markets, which may have adverse, wide-ranging effects on their demand for products, resulting in reduced expenditures. If demand for VEEA's products and services were to fall, VEEA may experience material adverse effects on VEEA's revenues, cash flow, and operations. Now, it's worth mentioning that there might not even be an active liquid trading market for VEEA's securities. This could limit investors' ability to sell their shares. Let's get into the exciting world of patents. VEEA has a portfolio that includes a lot of cool innovations, like a resilient antenna securing mechanism and some designs for edge communication devices. As of the end of last year, they had 121 patents and 25 pending patent applications. This is definitely important because it means they are protected and others can't necessarily copy their innovations. Also, their Taiwan and China-based companies provide the components and products to manufacture the system. The ability to find and continue the production chain helps the company achieve efficient growth. The company will face the challenge of making new products for an evolving competitive landscape. The ability to deliver a pipeline of innovative products will be key. It's also worth knowing who exactly is in charge, and that could affect the success of the company. Aldalan Salmasi is the chairman and CEO. Some other directors are Douglas Main, Kanishka Roy, Alan Black, Helder Antunes, and Gary Cohen. There are definitely some heavy hitters with financial experience, but not too many details about why some of them were picked. VEEA has a code of business conduct and ethics, which outlines a lot of governance. I should also mention that as of December 31, 2024, their Chief Executive Officer and Interim Chief Financial Officer has made conclusion that disclosure controls and procedures were effective. However, there is no report of internal control over financial reporting because it would be too difficult and expensive to actually do the assessment. It's also worth pointing out that the auditor changed. Markham LLT was dismissed and replaced by PKF O'Connor Davies LLP. One of the biggest risks facing VEEA is the whole economic and trade uncertainty going on right now, especially between the US and China, because that's where they make a lot of their stuff. This could mess with their supply chains and make things expensive. This whole situation is making it tougher for companies to plan and could really throw a wrench in VEEA's operations. let's not forget about cybersecurity. As a tech company dealing with tons of data, VEEA is a prime target for cyber attacks, so it's a constant battle to keep their systems secure. Any slip-ups there could cost them big time, damaging their reputation and leading to legal troubles. Then there is the possibility of their devices creating health risk from radio frequency and electromagnetic fields, which could lead to lawsuits. Bottom line, VEEA is dealing with some serious financial issues and real challenges. To summarize, while the company is painting a picture of innovation and growth, the numbers tell a different story. A story of declining revenue, increasing losses, and reliance on outside funding just to stay afloat. Their ability to turn things around hinges on being able to cut costs, secure financing, and prove that their technology can actually generate sales. The patents are great, but they need to translate into dollars and cents. It's important to remember that the company is still in high execution risk mode, so this is not a low risk stock. Thanks for watching. If you found this breakdown insightful, be sure to like, comment, and subscribe. Let us know which company you want us to decode next in the comments.